We'll be going over IRS Form 8689, allocation of individual income tax to the U.S. Virgin Islands. This is a tax form that taxpayers will use to figure the amount of their U.S. tax liability that's allocable to the U.S. Virgin Islands. It's a fairly straightforward form. The form itself is one page, which you will file when you in accompaniment with your Form 1040 or 1040 SR. So, and then there's a purposefully blank page, and then there are form instructions on the back. So, and then on the first page, there are 4 parts. There are income items, specifically sources of income allocable to the U.S. Virgin Islands. Part 2 is adjustments to arrive at adjusted gross income for the U.S. Virgin Islands, allocation of your total tax liability, and then payments of income tax. So basically it flows very similarly to your standard tax return. The primary difference is you're only reporting sources of income that would be allocated to the U.S. Virgin Islands. So a couple of points of note here. So taxpayers must file identical tax returns with both the United States government and the U.S. Virgin Islands. If you're not endorsing a check or a money order or enclosing a check or a money order as payment, then you're going to file your original tax return to include this Form 8689 to the IRS in Austin, Texas. And there is an address for the Austin, Texas office right here. If you are including payment with your filed tax return, then you'll file it with the Internal Revenue Service office location in Charlotte, North Carolina. So, and then you will send a signed copy of your tax return with all attachments, schedules, and forms to include this form with the Virgin Islands Bureau of Internal Revenue, and that address is also in the form instructions. If you need to file an amended return, you can do so. There are certain stipulations on being able to electronically file amended returns. And then finally, there are some points of consideration for active duty military personnel. So if you are a bona fide resident of the U.S. Virgin Islands and you're stationed outside of the USVI, your compensation will be sourced in the USVI under the Service Member Civil Relief Act. If you're not a bona fide resident but you're stationed in the Virgin Islands, your military compensation is not considered to be sourced from there. So if you're on active duty, you are a U.S. Virgin Islands resident, regardless of where you are, your military income is considered to be from the U.S. Virgin Islands. Things are a little bit more tricky with military spouses. If you're the civilian spouse of a armed forces member, you work in the U.S. Virgin Islands, and you maintain a domicile or a residence in one of the 50 states, District of Columbia, or another U.S. territory, then under the Military Spouses Residency Relief Act, MSRRA, your income is not considered to be from the U.S. Virgin Islands. Under this law, the military spouse must actually be in the Virgin Islands only with his or her service member spouse for their income to be considered from the Virgin Islands. In general, the source of interest income is where the payer is located. So your bank or financial institution, interest would be considered from the Virgin Islands if it's from a bank or a U.S. Virgin Islands branch of a U.S. bank. Same with dividends and alimony received from a person who's a bona fide resident is considered source income from the Virgin Islands. Real property, basically anything that comes from a source in the Virgin Islands is going to be accepted as Virgin Islands income. So the first part of this form is pretty straightforward. You're going to take all of these items of income. So let's go ahead and just pretend we're completing this form on behalf of John Smith. And then let's say we have $50,000 of wages. He's got $10,000 or $1,000 of taxable interest, and $2,000 of ordinary income or ordinary dividends, and then he's got a $7,000 a year pension. So a total of $60,000. Now, these are just numbers we're making up. If you were to do this on your own income tax return, you would have to actually look at every piece of income and determine for yourself, with regard to the forms and the instructions, which source of it or which income is coming from the U.S. Virgin Islands. And then same with adjustments to arrive at adjusted gross income. So all of these would be considered basically top of the line deductions. So above the line deductions, adjustments to adjusted gross income, educator expenses, health savings account deduction, moving expenses for members of the armed forces, IRA deduction, student loan interest. So we will assume that I'll make a point of clarification here. So if you're self-employed and you had self-employment income from the Virgin Islands, then you would divide your U.S. Virgin Islands self-employment income by your worldwide income to arrive at, parts of your income that are U.S. Virgin Islands sourced versus not. So if you had self-employment income of, let's say, $20,000, and $10,000 of it came from a business that you were operating on your own in the Virgin Islands, then you would divide the $10,000 of U.S. Virgin Islands income by the $20,000 of total self-employment income. You would arrive at 50%, and you would be able to deduct 50% of your total cost of the deductible part of self-employment tax, the self-employed retirement plans, or self-employed health insurance deduction, because then the other 50% would not be attributable to U.S. Virgin Islands income. Line 24, penalty on early withdrawal of savings. You should see a 1099 INT or a 1099 OID form, which would clearly state whether or not you had a penalty on early withdrawals. For line 25, you would again be able to deduct a prorated amount of your IRA deduction, based on dividing your total compensation or earned income, or dividing your U.S. Virgin Islands earned income by your total earned income. So if your wages were $50,000, but your worldwide income was $100,000 of wages, then you would divide the $50,000 by $100,000. You would arrive at 50%. You'd be able to take 50% of your entire traditional IRA contribution as a deduction from Virgin Islands income. You'd still be able to take that as a deduction on your U.S. sourced income. Then the primary other item would be on line 29. You would total everything up from line 17 through 28. You would also include any other deductions included on the Archer MSA deduction line and other adjustments line of Schedule 1 attributable to your U.S. Virgin Islands income. So then we'll say that you had $3,000 of an IRA deduction attributable to U.S. Virgin Islands. That results in a $3,000 total adjustment to AGI. So your adjusted gross income for U.S. Virgin Islands would be $57,000. So now you're going to allocate the amount of tax that you paid on your tax return to the U.S. Virgin Islands. This is kind of hard to illustrate because I don't have an actual completed tax return, but you would first start with, let's just say your tax bill was $15,000. We'll make this up, even though it's I'm pretty sure this is not in accordance with the tax tables. For line 32, you would enter the total of the amounts from either the earned income credit, the EIC, the refundable child tax credit or the additional child tax credit, and the American Opportunity Credit. Those are the amounts from Form 1040. There's a lot of other deductions from Schedule 2, like self-employment tax, Social Security and Medicare tax on unreported tip income, uncollected Social Security, Medicare tax on wages. These are all adjustments to your total tax liability. So, and then on Schedule 3, you would have health coverage tax credit from your IRS Form 8885, credit for repayment of amounts included in income from earlier years, other payments and refundable credits reported on line 13Z of your Schedule 3. So these are all different items that you would total and then include here. So let's just say for illustration purposes, those amounts amounted to $5,000. In line 33, you would simply subtract the $5,000 from your $15,000 and you have $10,000. You're bringing down your adjusted gross income from your income tax return. So let's just say that this represented 50% of your total income. Your adjusted gross income is $100,000. Then you would divide your AGI up here by the AGI down here, and you would get 57%. Then you multiply this line 33 by the tax percentage here, you would get a total of $5,700. And finally, in part 4, you would simply calculate the income tax that you've already paid. Let's just imagine that you paid $6,000 to the Virgin Islands. You didn't have any estimated tax payments, but you certainly could. Maybe you filed an extension request and you paid an amount to make sure that you did not have an underwithholding penalty. But let's just say that you didn't need to do all that because you've already overpaid that. You'll simply bring down the $6,000 and then you'll enter the smaller of either 36 or line 40. The smaller one is the 5,700, and this is the total payments line of your tax return. On the dotted line of that tax return, you would enter Form 8689 to show the 5,700. So now you have to decide whether there's an overpayment or an underpayment, and we have an overpayment in this situation, so that would be $300. And then you could either have that refunded or applied to next year's estimated tax, just like on your Form 1040. But let's imagine that you had an underpayment of $300. Then you would have to enter the amount on line 46 that you would pay when you file your income tax return. You would add that amount to the total payments line. On a dotted line, enter your Form 8689 and reflect the $300 that you're sending your payment with. So again, this is fairly straightforward. It's literally a shadow version of your federal tax return, specifically to include items that would be attributable to income or deductions or credits that were sourced from the U.S. Virgin Islands. If you want to know more about this form, you can check out our article. Simply go to teachmepersonalfinance.com, type in IRS Form 8689 in the search bar, and you should see our article. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or concerns, please hit me up in the comments section or send me an email. Thank you very much and have a great day.